last week, in fact, now we're staring at the session lows. We're on the brink of breaching that 15,800 mark on the Nifty futures. On the spot, we're already sub that level. So it's a solid 450-point decline that you're currently sitting at. No sectors really spared. All sectors are in the red as we speak right now, with the breath as well acutely damaging. You've got a good 187 stocks now standing to the reds as we speak. It's pointless really talking about individual movers because all of it is seeing a very, very sharp slide. Maruti, Tata Motors, IndusInd Bank, Eicher, Axis, L&T, SBI is down 5.5%. ICICI Bank is down 5% as we speak right now. Bajaj Finance also headed in for a near about 5% decline. In fact, the cut on Maruti and Tata Motors is as steep as 6 to a little over 6% on Maruti as we speak right now. It is, of course, the oil sensitives, and it is some of the metal names along with technology which are just about managing to hold their head above water. In fact, that's exactly what we're going to talk about. We have with us Mr. R Sharma from JSPL joining in on the show right now. Mr. Sharma, morning. Glad that you could take time out and join us today. Just wanted to understand the repercussions for the steel industry with the ongoing conflict between Ukraine and Russia, and what would it really mean for prices on one hand, and of course, exports on the other for the larger steel industry as such.
Yeah, thank you very much. Good morning. There are two effects of this Ukraine-Russia war. One is opportunity and the others are the threats. The opportunity for the Indian steel industry is to export more and more to European Union and also to the MENA countries, that is Middle East and North African countries. So this market has opened in a big way for the Indian steel producers. So this is a positivity. And I would say the opportunity in this particular war. And the threat or the challenges are the energy prices. So it is very painful that the energy prices are going up every day from $90 to $100, $110, $120. Now some of the reports, they say that it may reach to about $150 or in times to come maybe $180 per barrel. So this is a very, very huge and steep increase. So the energy prices, why the energy prices are increasing, it is yet to be understood. But there is a ray of hope. If the ruble-rupee trade that starts, then I think India can click a deal with Russia at 25 to 30% lower rate of oil, that is per barrel. So that means if we get 25% discount or 30% discount on per barrel from the oil from Russia, then I think this will be the best deal for India. And this will give a sea of relief. And once such kind of deal takes place with Russia, with Rosneft, as it is offered by Russian oil companies, then I think this will impact the world energy prices in terms of bringing down the oil prices worldwide. Because such kind of deal, if it happens with India in ruble-rupee trade, then a similar deal may happen with China. China is already having RMB to ruble trade for so many years. So these two countries, China and India, can bring down or can pull down the international energy prices.
Sure. That's that on energy, but specifically when it comes to steel prices, the fact that, Russia is currently having about a 4% share in the global steel production, wanted to understand where do you see the global steel prices headed because of the, supply vacuum which has been created, and whether or not it's going to lead to a further push for steel exports from India?
Yes, for sure. The steel exports from India will increase because there is a good market today as far as the spot market is concerned. So perhaps all of the Indian mills must be taking the share of the total pie. The another is the steel prices. Yes, the steel prices have gone up by 5,000 rupees a ton in last 3 weeks. The reason being because the coking coal has gone up by $545 to $550 a ton, and the oil prices have gone up. So these oil prices internationally and the crude prices, bunker prices, Brent oil prices, they have also increased the prices of the international freights. So the a vessel, I would say, the Supramax, it used to be at about $18,000 to $20,000 a day. as a daily hire or daily rent, and now it has reached to about $28,000 to $30,000 a day. So that has impacted the ocean freights. And similarly, the ferro alloys, the specialty alloys like nickel and the manganese and many more alloys like niobium and titanium. So the prices of all these alloys has gone up. And similarly, the coking coal prices have gone up, iron ore prices have gone up in the international market. So the cost of production has gone up by 5,000 rupees a ton. And that is an impact on the domestic consumers. But yes, when we export to Europe or to Middle East, then these increased input cost can be set off easily because the prices in Europe are much higher than the prices in India. So today, like for example, hot rolled coil prices in Europe is about $1,200 to $1,250 a ton, whereas in India it is about $950 a ton. So that is the major difference. So the spot market prices are good. Steel industry will definitely get a benefit out of it.
You did speak about the cost of production going up, and I just wanted to also talk about the rise that we're seeing in key raw materials. Is this a net benefit? And on the back of that, I wanted to understand specifically for the company, can we see margin expansion clubbed with an increase in your volumes?
Yes, there'll be a marginal margin expansion increase in terms of spot market international prices. As I told you, the difference in between spot market international prices and the domestic prices is about $200 to $250 as of now. So more the exports, more the profit. So that will definitely set off some of the losses or when we sell at par to the domestic customers, especially to MSMEs. So I think that will give a setting off or say trade off business. So we can earn more in exports and we can earn little less in domestics. But yes, the average increase in EBITDA is likely to be there in the last month of this particular quarter.
And given that 35% of your revenues come from the export market, you already have a presence in over 30 countries. You spoke about the export opportunity. Have you already started seeing higher export orders? Because it seems to be a very time-sensitive opportunity if Indian players don't grab it as of now.
Yes, we are already booking orders up to the level of 35 to 40% of our total produce. And this will continue. We have orders up to end of April, supplies. And down the line, we'll be booking orders up to May also.
But Mr. Sharma, just want to get one clarity. It's being seen as the super cycle of commodities, right? Once again, what everybody will want to know is where are steel prices headed? What kind of price hikes are inevitable? And all of this has a cascading impact, right? Infrastructure contracts, there are cost escalation clauses that will need to be invoked, etc.
You see, the steel prices is very difficult to predict as of now that what will be the steel prices after 10 days or 15 days. We are waiting the day the ceasefire is declared, and then I'm sure the prices will start stabilizing. And the energy prices, I told you, the coking coal prices, domestic steam coal prices, everything has gone up. And this can only be arrested by stopping this war, and also the world, different governments will have to act very swiftly to control the energy prices. Otherwise, these prices will keep on rising and we do not know where the prices will reach unless people start buying less. So, but it is very difficult because across all commodities, the prices are going up. So it is not only steel, but also aluminum, copper, nickel, everywhere the prices are up. So this kind of situation is unpredictable as of now. But yes, I agree that today, whatever the prices are, the metal industry, the steel industry, they are getting a reasonable amount of profit. And I would say the additional profit from exports. And this will continue till this war ends.
So let's see what happens. We are, of course, in uncharted territory, rupee hitting a new low. You've got crude, which has topped $130 a barrel before retreating slightly. Gold, which is above $2,000 an ounce. And, of course, red across all equity screens. Thanks a lot, Mr. Sharma, for joining us.